I'm going to try and bust the biggest gold and silver myths out there. When it comes to gold and silver, there's a lot of misinformation floating around. People often make investment decisions based on what they've heard, rather than what's actually true. That's why I'm here to set the record straight on some of the most common myths surrounding these precious metals. These myths aren't just harmless misconceptions, they can actually lead to some pretty bad investment decisions. Imagine thinking you're investing in something that's safe and stable, only to find out it's not what you thought. That's why it's so important to separate fact from fiction when it comes to gold and silver. A lot of people think that gold and silver are just for collectors or for making jewelry, but there's so much more to it than that. By understanding the true value and role of these metals, you can make more informed decisions about your investments. Let's start with the myth that gold and silver are only used for jewelry and coins. Sure, that's a big part of their appeal, but these metals are also crucial components in a lot of modern technology. From smartphones to solar panels, gold and silver are used in a wide range of applications. Another myth is that the value of gold and silver is only based on their rarity. While it's true that these metals are scarce, their value is also tied to their usefulness and demand. For example, gold is a great conductor of electricity, which makes it perfect for use in electronics. Some people also believe that gold and silver are not good investments because their prices can be volatile. But the truth is, all investments carry some level of risk. What's important is understanding the underlying factors that drive the market and making informed decisions based on that information. A lot of people also think that investing in gold and silver is only for doomsday preppers or those who are trying to avoid the stock market. But the reality is, these metals can be a great way to diversify your portfolio and protect your assets. One of the biggest myths I've come across is that gold and silver are not divisible or fungible. But that's just not true. You can buy gold and silver in a variety of forms, from coins to bars to even digital investments. And because they're widely recognized and traded, you can easily sell them or trade them for other assets. This is especially important for those who are looking to invest in precious metals as a way to hedge against inflation or market downturns. The most surprising thing to me is how often people overlook the role of gold and silver in the global economy. These metals are not just relics of the past, they're still widely used and respected today. In fact, central banks and governments around the world hold massive reserves of gold and silver, which they use to back their currencies and stabilize their economies. So what can we take away from all this? For one, it's clear that gold and silver are more than just shiny metals, they're valuable resources with a wide range of uses. By understanding the true nature of these metals, we can make more informed decisions about our investments and avoid getting caught up in common myths. If you've encountered any gold or silver myths that you'd like to share, I'd love to hear about them in the comments. And if you're interested in learning more about precious metals and investing, be sure to subscribe for more content like this.